Hello and welcome. In this video, we are going to be going over the newest version of our scans 3.0. If you saw our first video, or if you go back and watch it, you'll see that the first edition of our scans was the first edition that we released to the public. And it was basically just a bunch of stocks and lists on the page. And it was kind of hard to see what was what. It was kind of hard to see if a stock was popping up on multiple scans at once. And it was kind of hard to just take a quick look at the screen and find the strength and the weakness. And so what we did was we introduced these color-coded boxes so that you can just quickly glance at the page and see if a stock is strong or weak, or if it's looking for something. It's just based on these boxes. And we also included it so that now we have the long side and the short side both on the same stream, so you don't have to switch streams. We used to have it separated, but now it's all in one. So if you want to go long or buy calls, the top is what we're going to look at. And for the short side, it's on the bottom. If you want to buy puts or if you want to go short, it's on the bottom. They're almost mirror images. The only ones that are different are these two here on the end, the darks list, which we'll go into, and the X versus SPY. Those two, darks list is always long or bull for the bulls, and X versus SPY is really neither. It's just a neutral list, which we'll go over. So what we're going to do here today is we're going to go over each scan individually, and we're going to look at what it looks for, and then we will bring up some examples on charts, and we'll go into some real life examples and see what it really looks like. So just a couple quick things to touch on here before we get started. The first thing is that these scans are based on price action only. There's no indicators involved. It's only price action, and it's centered around the Strat by Rob Smith, which, if you're not familiar, we do have some info on our Discord. We will go over a few basics here in this video. We won't go into every single aspect of the Strat, but we will go over a few basics. And these scans start with some fundamentals of the Strat, and then we add a few other fundamentals, a few other things that we look for, a few other aspects. The second thing I wanted to touch on is our watch list. So if you see some of these charts or you see some of these lists and you say, well, so-and-so stock wasn't, I don't see that here, but it should have been. We have a watch list of about 250 stocks that we run all our scans through. And we do this because if we were to just open it up to the market, we would get way too many results. And we would be just overwhelmed with stocks, and a lot of them would probably not be good stocks to trade. So good stocks to trade, what we're looking for is high volume in the underlying. Usually options involve optionable stocks, options available. Not necessarily, it's not a deal breaker, but if they don't have options, we like to keep it within a reasonable price range, like $20 to $100, something like that. If people are buying shares, it's a good price range to buy shares in. So we have a watch list that we've identified, good trading stocks, about 250, and we run all our scans through that. So it keeps our list somewhat consolidated, a little more focused than if we were to run it all through the whole market. And also, it's good to see the same stocks popping up over and over, so we can learn, a little bit more about the stocks and their patterns and their behaviors. It kind of goes a little bit further than just trading different stocks every time. So that's why we set up the watch list, and we do post the watch list if you're interested in that. That's on our Discord as well. So to get into it, before we start, let's talk a little bit about the Strat and just the basics of it. Like I said, we won't go into every aspect of it here, but we will go into a few basics so it'll make a little bit more sense when we're looking at the scans. Okay, so here we have our charts, and this is what I look at. This is the way I set my charts up here. Some of these are different colors, and that's based on some studies for the Strat. So what you're looking at here are, if we look at a yellow bar, okay. Well, first off, the Strat breaks down candles into a 1, a 2, or a 3. Okay, there can only be 3 types of candles. A 1 is an inside bar. Okay, so if we look at this, this is the hourly chart here. This yellow bar here, the high did not go above the previous high, and the low did not go below the previous low. So the entire trading range of this bar is inside the trading range of the previous bar. Okay, so that's an inside bar. That would be considered a 1 when we're talking about the strat. Okay, the white bars is the opposite. It's an outside bar. Okay, also an engulfing bar is the same thing. The high is above the previous high, and the low is below the previous low. So the entire trading range is outside the previous trading range. Okay, that's a 3 when you're talking about the strat. And then everything else is a 2. So a 2 is if it goes above or below the previous range, but not both sides. Okay, so this would be a good example right here. These are all 2s if they're not white or yellow. But right here we had a break of the previous low, okay, but we did not have a break of the previous high. So this is a 2 down, okay? And this one here we had an inside bar, and then we had a 2 up. So we broke above the previous high, but we did not break below the previous low right here. So this would be considered a 2 up. Okay, so this would be a 2, 1, 2. Okay, and the significance of that we'll see in a few minutes here. So those are that's the basics of the candles 1, 2, and 3. And the other big fundamental of the strat is multiple time frame analysis. So if you look here, this is all the same stock, right? We have Best Buy here up, and this goes from the 1 minute all the way down to the monthly. We have the 1, the 3, the 5, the 15, the 30, and then we have the 1 hour, the 4 hour, the daily, the weekly, and the monthly. Okay. The 4 major time frames when we're talking about the strat are the monthly, the weekly, the daily, and the 1 hour. Okay. I like to look at the 4 hour, but we don't really consider it part of the continuity. It's really just this month, week, day, and hour. Okay. When you look at the month, week, day, and hour, if all the candles are the same color, right, meaning red or green, like as if the red means it's trading below where it opened, okay, and green means it's trading above where it opened, okay. If they're all red on the month, week, day, and hour, that would be considered full time frame continuity, okay. If they're all green or red, it would be considered full time frame continuity. If you have one that's different, then you wouldn't have full time frame continuity, okay. But time frame continuity is important because what this captures is it captures participants on every time frame, and you can see what they're doing. Ultimately, our goal in trading as retail traders is to find out what the computers are doing, what the institutions are doing, and just tag on with them, right? We're looking to just hop on their coattails and ride. We're not looking to beat them because we're not going to. So when you look at multi-time frame analysis, you can see where the stocks are to begin with, but then you can also see if every time frame is green, then everybody's buying, right? It's obvious. You can see that in the charts. Whereas if you zoom in if you're just looking at a 5-minute chart, it's really hard to tell what's going on the major time frames just by zooming in on these lower time frame charts, like a 3-minute or a 5-minute, which is what a lot of people trade on, which you can still look for entries on. But you want to base these decisions on longer time frames. Okay, it's kind of like looking at the 200-day moving average. It's a longer average, and so like the monthly is kind of similar to that. It's not the same, but if we're green on the month or if we're red on the month, I mean, of course, if it's not the first day of the month, okay, which I'll talk about in a second, but if you have some days in the month there where you're trending, then you can use that to your advantage, okay? So like Best Buy here, just as an example, we're red on the month, we're red on the week, 2 weeks in a row here, we're pretty red. Okay, we were actually green on the day here. So the way this study works is if the boxes are filled in, or I mean if the candles are filled in, they're red. And if the candles are hollow, they're green. So you can tell if it's yellow and it's hollow, it's a green candle. It's an inside bar green. And so we were green on the day here, but we were red on the month and the week. And so how we could use that is, okay, we could look for a reversal, okay, because we were red for actually 2 months in a row here. We're red for 2 weeks in a row here. So this green is possibly just a blip, right? It's just going to pop up green for a day and then potentially go back red um, based on these longer time frames. It doesn't mean it's necessarily definitely going to do that, but that's what we can look for, okay, by using these longer time frames. And this is a double inside, which is a pretty good indication of move is coming up. So the inside bars, why do we want to look at that? Inside bars are consolidation, okay? What this is saying is that the buyers and the sellers are agreeing on a price for the most part, and the range is tightening, okay? So like if you look here, it's a bigger range, right? 102 to 108 or so. And now if you look here, it tightened 105 to 102 and change. And if you look here, it tightened even more, 105, 103, it's tightening. It's getting smaller and smaller. The range is getting smaller and smaller. The area of consolidation is tightening. And so generally what that means is the tighter it gets, the more explosive a move is going to be following. Okay, so what we would look for is an inside break. We would look for a break of a high or a low, and then try to play that as a breakout. In this example, we would probably be looking at a break to the downside because we were red on the month, red on the week, and to the downside. Now, like I said, something to keep in mind is where are you at in the month? Okay, so right now, the month just started. So the month and the week are always going to be the same in this case because it's the first week of the month. Okay, next week we would have a different weekly candle and it would separate, it would decouple from the monthly. Okay, so if you have a case where Monday is the first day of the month, then what you're going to have is the month, the week, the day, and even the hour for the first hour of trading are all going to be the same. So in that example, time frame continuity is not going to be as strong, right? It's not going to have the strength as if you were halfway through the month, simply because the candles are going to be the same. If it's green on the week, it's going to be green on the month. Okay. And on Monday, if it's green on Monday, and that's the first day of the week, the first day of the month, it's going to be green on the day, green on the week, and green on the month. So once you have more days in the calculation, it adds a little more strength to the time frame continuity. Okay. So knowing this, oh, and one other thing I'll just touch on real quick is the outside bars. Okay, so outside bars are higher highs and lower lows. Okay, and this is part of the strat that's called the broadening formation. A broadening formation on a smaller time frame is going to be a 3 on a longer time frame. Okay, so if we were to look at this on the hourly chart, on the 4-hour chart here, what we're going to see if we zoom in, okay, on like a 15-minute chart, what we're going to see is we're going to see higher highs and lower lows. Okay, I don't know if this is lining up exactly or not, this little setup here, but we're making higher highs here, we're making lower lows here. This could be a 3 on a longer time frame, an hour or a 4-hour. Okay, so when you're looking at multi-time frame analysis, that's what you can see. And if you look at a 1, essentially what that is a wedge, right? You see lower highs and higher lows, and it's kind of tightening in, and that's what we see when we see a 1, okay, or an inside bar. Okay, so if you look at, here's a high here and here's a low here, and all of these candles are trading within that range. Okay, this would be a compound 3. These two candles combined would make a 3, and all these candles are trading inside of these two candles here. Okay, and so that's how you get inside bars on longer time frames. It's made up of a bunch of smaller candles trading inside of a range of one candle or two candles that are bigger. Okay. So knowing that, let's start to look at these scans. And the first two that we have here, okay, I'm not gonna talk about the top and the bottom because they're exactly the same. They just look for the opposite results. So our watch list gainers is just that. It's really not even a scan. Basically what it is just the watch list that we have sorted by percent and by net. The first one here is sorted by percent, and the second one is sorted by net. Okay, there's only a couple scans or lists here that are sorted by percent. This one is one of them, and it's sorted by percent here. This is actually the mark percent in Thinkorswim, and we use this one because this one updates before the market opens. So in pre-market, you can come here and you can look at this list, and we can see percentage-wise what's moving before the market even starts. Okay, none of the other scans will be updating unless it's the futures. Some of these you'll see like NQ or ES. These will update because they're updating in real time. It's almost 24 hours updating, so the net will be changing. But for equities, for most stocks, they're not changing, so they won't be updating pre-market. But these lists here will. Okay, the percent lists. So we also want to look at the net change. Okay, and once the market opens, these start populating. And the net change is important, particularly when you're dealing with options, okay, because you could have a large percentage move on a stock that's, less expensive, and you're not going to get a big net move. And you can see that reflected in these two lists. One is sorted by percent, one is sorted by net. So if you see, let's see, okay, FDX, okay, is number 3 on the list, or actually even, this one here, MRVL is the top on both. That was a big mover. But if you look at Z is big on the net change, but it's lower on the percentage change. And it has to do with how expensive the stocks are. And once they get moving, the more expensive stocks are going to move more point-wise, dollar-wise. And so that is more impactful to options than percentage, okay? And so that's why we sort almost all of them by net, is because a lot of folks trade options, and when you're trading options, the net change is going to have the biggest impact on your option values, more so than the percent change. Okay, but it's still important to look at the percent changes, particularly in the pre-market, because if stocks are moving pre-market, they want to have them on our radar before the market opens. So then once they start changing, the net will come into play. So this one is sorted by percent. Okay, and if we look up here at the top, it will have a little bit of a key here as to what's what. But this is just simply, is it green or red on the month and week? Okay, so we're looking at the longer time frames. Okay, obviously if it's up in the percentage, it's going to be green on the day, right? And the bottom ones are going to be red on the day. So are these green or red on the month and the week? Okay. So it's as simple as that. And this is just so we can take a glance and see where are these stocks. Okay, so VIAC, Viacom, it's red on the week, it's red on the month, but it's green on the day, and it's up pretty good on the day. So this isn't an indicator to not trade it, okay? But this is an indicator as to you don't have the long time frames in your favor, okay? And I forgot to mention, but what we have here is a snapshot. If you look down here, this is last Friday the 3rd at 1 o'clock, okay? Because the scans don't really update aftermarket as well. They don't really look right, and they're not always accurate in the aftermarket. So I pulled up a snapshot of Friday at 1 o'clock, and I matched the charts to that. Okay, so this isn't pre-market. Okay, this is 1 o'clock in the afternoon. But what we can see here is that our stock's green on the month and the week. Okay, like Discovery here, DISCA, it's green on the month, but it's red on the week. Okay, so what that means is that we could be looking at a reversal. Okay, if it's green on the day and it's green on the week, potentially it could start to go green on I'm sorry, if it's green on the month and it's green on the week, it's green on the day, we could be looking for it to change back to green on the week. Okay, so that's how we can kind of use these. And this is the same thing on these boxes here, but just sort of by net. Okay, again. The next column over that we have here is the time frame continuity. Okay, and this is where the scans start. And what we have here is green on the month, week, and day. It has to be to even show up on this list. Okay, so green on the month, week, and day. And then we're going to look at, is it green or red on the 60 and the 15? Okay, the hourly for the 60 minute and then the 15 minute. All right, and why we look at the 60 and the 15, a couple of reasons. The scans, we use Thinkorswim for our scans, and they update every 5 to 8, 10 minutes sometimes. So if we start looking at any increments lower than 15 minutes, it gets to be a little inaccurate. Okay, 15 minutes is a good accurate time frame. The second reason is it easily breaks down. So you have 4 15s and a 60, and so you can zoom into these 15 minutes to possibly look for some reversals of the 60 minute. Okay, and then this last column is not green or red on the day, but is it trading above the previous day's high? Okay, and what that would signify is a 2 up on the day. Okay, if you remember, a 2 up means it broke above the previous day's high, did not break below the previous day's low, but it's above the previous day's high, and it's actually trading above the previous day's high, so it would be considered a 2 in force. Okay, if it just wicks up above the previous day's high and then comes back down, then it would not show up here, or it would just be black, right? Or it maybe never broke above the previous day's high. It wouldn't show up here. But if we're currently trading above the previous day's high, then this box would also be green. Okay, just the opposite, trading below the previous day's low, it'd be red. Okay. But remember, just to show up on these lists, it has to be green on the month, week, and day to begin with. Okay, so we're starting out with some time frame continuity, and then we're just looking at some finer details here to kind of zoom in. Okay, and I'll show you examples in a second. All right, the next two scans that we have here are our TFC inside hour and our inside day yesterday. Okay, so these are like some inside bar scans. In this list here, this is simply inside day yesterday. Okay, previous day was an inside day. And so what we're looking for is we're looking for a breakout of the inside bar, okay, to the upside or to the downside down here at the bottom. And again, these are the same here. Green or red on the 60 minute, green or red on the 15 minute, and above the previous day's high, yes or no. Okay. And this is also sorted by net. All right. Been having some rocky days. So you see all these volatility instruments up here at the top. We see a lot of stocks down here in the red. So that's why you see that, because we just had some pretty volatile days here, especially on Friday. The next one here is the time frame continuity inside hour. Okay. And so what we're looking at here is green on the day. It's got to be green on the day to show up here. And then is it green or red on the month, week, 60, and 15? Okay. The 15 is kind of it's just an additional scan. It's not really considered when you're looking at the full time frame continuity. Full time frame continuity would be, again, month, week, day, and 60. But the 15 is what you can kind of spot some reversals on. Okay, we'll see some examples in a few minutes. But this right here would show you at a glance, do you have time frame continuity? Okay, so down here, as an example, MP, we were red on the day. It's got to be red on the day just to show up on here. And then we're also red on the month, red on the week, and red on the 60. We're actually red all the way down. Okay, so this is a really red stock. But looking at these first three bars here, the month, the week, and the 60, in combination with already it's red on the day, this would be considered full time frame continuity to the downside. Okay, we don't have any to the upside here. It's not surprising for Friday. And again, this is also sorted by net, as you can see here. Okay, the next scan that we have here, these two here are A plus scans, and they're called the A plus scans because they're kind of like the cream of the crop, the top dog, so to speak. They kind of filter out a little bit more of this stuff than the rest of them, and these right here are really considered our best scans. In my opinion, this TFC orb scan is really our top scan. So what we have here for the TFC plus 2% up is TFC green on the month, week, and day. Okay. Also, is it green on the 60 or the 15? Okay. Is it above the previous day's high, trading above the previous day's high? Also trading above the previous week's high, okay? But also it has to be up 2% on the day, okay? That's the key to this one here, is it up 2% on the day, okay? If it's not up 2% on the day, it will not show up there, okay? And not looking good here for the long side on Friday. The A plus TFC orb is once again green on the month, week, and day. Is it green or red on the 60 and the 15? Okay. Is it above the previous day or week's high, trading above, not just wicked above, but trading above? And then does it have orb? Okay. And orb is the opening range breakout. All right. And let me bring over, sorry, give me 1 second. Let me bring over a study real quick. Okay, this is our orb study. Okay, so the orb study is the opening range breakout, and what we look for is the opening range. The opening range is what we calculate using the first 15 minutes. Okay, so you can look at one 15-minute candle. You can look at 5 3-minute candles. What we look at here, just this is my personal chart. I look at 3 5 minutes here, but it's all calculated using the first 15 minutes, whatever that ends up being on your chart, and it marks off the high and the low. All right, what we have here is you can see this green line here marks off the high, and this red line here marks off the low. Okay, so in between, and the yellow line is just the midline. So in between these two bars here is the opening range. And if we were to change this to a 15-minute, we would see that it's this one 15-minute bar marked off the high and the low. Okay, and we can look at a 3-minute. Okay, same thing. Okay, 1, 2, 3, 4, 5, marks off the low, marks off the high. And then what we look for is it breaking above the opening range or below the opening range? Go back to the 5-minute. All right, so in this case, this is Best Buy. In this case, it's set the opening range. Okay, it worked back up. This candle opened right here, tried to go up, but it couldn't, and then came down and broke below the previous day's low. I mean, it broke below the opening range low. So at this point, it would have shown up on the opening range, the orb scan to the downside. Okay, if it was TFC, which I believe it was, to the downside. Okay, these dotted lines here are a couple of fib levels, which they're not used in the calculations, but I left them just on my personal chart here. As you can see, it does have a tendency to react, but these are not included in the calculation of the scans at all. It's just the opening range high and low. But this is what it looks like on a chart. Okay, later on in the day, it tried to go and break up above, okay, but it did not. It couldn't do it. It bounced right off it. Okay, so it never would have shown up on that on that orb scan to the upside, but it probably would have to the downside. But um, that's what we're looking at, and I'll show you some more examples here in a second. But that's what the opening range breakout is, or the orb. Okay. Also including TFC, so green on the month weekday plus orb. Okay, and this is a very powerful scan. A lot of hitters come from this. The watch list orb is very similar to the TFC orb, except it takes out the TFC element. Okay, this is just straight from the watch list. Does it have an orb? Does it have an opening range breakout? Okay, and so it's also another good scan, even though you don't have that time frame continuity. Time frame continuity is not necessarily a deal breaker when you're trading. If to the long side, you don't necessarily have to have it. It's just a little bit more confirmation. It's a little bit more wind in your sails, so to speak, when you have that time frame continuity. But you don't always have to have time frame continuity to get a good trade. So we started looking at this watch list just in general, and does it have an opening range breakout? Okay, and that's what this is. Again, it's sorted by net. And again, this is telling you, is it green on the 16 and the 15? And is it above the previous day and week high? Okay. Dark's list here, Dark Magician, he runs the Discord. And this is one of his personal lists. This is not run through our watch list. So we have this here to just kind of catch some stocks that maybe we don't have on our eyes. We don't have our eyes on because they're not on the watch list. But maybe some runners for the day. This list is based on moving averages. It's the only scan that we have based on moving averages. It's not based on the strat. It's just a little additional type of a bonus scan here that kind of can catch some runners that maybe aren't on our radar already. This is also sorted by net, and it tells you, is it green or red on the month and week. So we have a little bit of a strat element to it, so we can just see at a glance kind of how they're doing on the longer time frames. And then maybe do we need to start looking at them on the shorter time frames? Okay. And then down here we have the X versus SPY. And the X versus SPY is, excuse me. The X versus SPY is the sector ETFs, okay? The spider sector ETFs. They start with the X's, okay, most of them. So we call it the X versus SPY. And it's just how are they relating, or how are they comparing to SPY on the day? Okay, SPY is usually right in the middle of the list. Okay, it's the benchmark, what stocks are usually compared to, right? The beta weighting is generally used. SPY is generally used for that. And if SPY is doing poorly on the day, but a sector is doing well on the day, okay, that can give you an indication of what sector we want to look at, what stocks within that sector we want to look at to trade, okay, or vice versa. Okay, so TAN is the solar ETF. TAN's trading below SPY. So if you want to go short or look at puts or whatever, on the day, TAN or XLK would have been a good choice. Okay. The other thing we look at here are reversals, okay, because these ETFs, they generally don't tend to trend for very long, okay. So a lot of times we'll see, and XLK and TAN are two of the ones that are some of the most polarizing ones on the list. They tend to flip-flop pretty often. So maybe not every day, but every 2 or 3 days, you'll see TAN on the bottom, and then all of a sudden it'll pop up to the top. Okay, so if you wanted to go long, like a swing trade or a buy and hold, that type of thing, then these ones that are down here on the bottom in relation to SPY could be a good choice. Okay, not necessarily, not saying they're definitely going to be, but they could be a good choice to go ahead and look into these ETFs and see which stocks are potential candidates for those reversals, okay, or continuations. All right, so XLP and XLU had great days on Friday comparatively, okay. And that's the other thing, is that we compare, because if you look at XLB just on its own, okay, down 1.4% or 0.14%. If you look at that by itself, in and of itself, it doesn't look like a great day. But when you look at it compared to SPY, negative 1.24, it actually is a good day. All right. So that's why we look at this list here for those two reasons, digging into the ETFs that are up or down, depending on which direction you want to trade compared to SPY, or also potential reversals for the next, following day or week. All right. So now that we've gotten this scam, the basics out of the way, we can go ahead and look at some examples. So what we can do is get my charts here, and we can look at some of these examples here. So I don't think we need to really look at the watch list gainers, but we maybe can just bring up a couple here. So like Z. Okay, Z was doing well on Friday. It was up 9%, 5 point something here on the net. So we can look here. Okay, so here's the daily chart for Zillow, and it gapped up. I'm not sure if there was some news there or something, but it gapped up and it traded up. Okay, it did try to work back down, but it didn't make it, and it started coming back up. This is a nine period moving average. This is just my personal charts. Like I said, it's not based. The scans are not based on any moving averages whatsoever. But this is just, I like to just have an idea of where we're at in comparison, just in my own personal trading, where we're at with these moving averages. And I also like to have the volume here on the on the daily and also on the 1 minute, just so I can see when that volume is really coming in. Okay. And the dotted orange line is the VWAP, which I just look at personally. So as you can see, Zillow here, okay, Zillow was, okay, if we take a look, green on the month and green on the week. Okay, so that's these two bottom ones here on the bottom, green on the month and green on the week and green on the day. Okay, and at 1 o'clock it was green on the hour. That's like all systems go. Okay, so, and if we look at the opening range, okay, we did not get out of the opening range, so it would not have shown up on that. Okay, not have shown up on the orb scan, but nonetheless, it still could have had a good day. And it didn't show up in the orb scan probably here because it worked down, kind of looks like right from the start started to work down and then started to come back up, but never got back above that high of the day. And that high of day is what set the opening range. So it wouldn't have shown up on that orb scan. But nonetheless, a lot of green here. Okay. So let's take a look at another one. Um, so let's see, Discovery here. Okay, Discovery was green on the month, red on the week. Okay, so if we take a look at that, that would be green on the month, red on the week, green on the day. Okay, so that's why it was showing up on that watch this gainer scan. Here's where we closed the previous day. Okay, and here's an inside day. So this is a good example of the inside day breakout. Our high was right here at 23.39. Okay, and it looks like we opened here and possibly traded down. And as soon as we got above this range here, this level here at 23.39, that would be an inside bar breakout, inside day breakout, and that would be a signal to go long. Okay. And in this case, when you're looking at inside bars, the target is the previous bar. Okay. So when you're inside, the bar that you're inside is called the mother bar. Okay. For the strat, that was what they call it, is the mother bar. So the target would be the high of the mother bar. Okay. We didn't get there on Friday, not at 1 o'clock, but that would be the target. So if you enter a trade on the inside day break, you're like, okay, well, where's my target? Well, this is going to be your first target, 23.93. Okay. Not saying it's going to stop there. It could not. It could keep going, and then your target would be the next day's target. Okay, 24.34. And if you look here, we had 1, 2, 3, 4 lower highs, okay, 4 consecutive lower highs. So this could be considered a PMG, or a pivot machine gun. Okay, and the pivot machine gun is when you have consecutive lower highs. It's generally 4 to 5 lower highs on the daily. Could be any time frame, but generally we look at the daily. And when it breaks above, okay, you could start running through all these highs, because when people are going short, their stops are generally going to be set at the high of the day. Okay, so if the price goes and breaks above this high, they want to get out of these short positions. So if you start breaking above these highs, you're going to have longs that want to go long because it's breaking out, but you also have shorts that are scrambling to cover. So sometimes these pivot machine guns, when you have these lower highs or higher lows in the opposite direction, can be potentially really big moves, really explosive moves. And when you have that big move, that's what they call a triangle day out, okay, for the strat. Really just means a big correction, okay? And so in this example here, we have the inside bar, we have the breakout. This is a 2 up on the day, okay? And where were we? But we were still red on the week, okay? So if you look at the week here, we're still red on the week, all right? Now, as you can see, you don't have to be green on every time frame to get a good trade. You can still get a good trade out of this, okay? And if you look at this weekly candle, we worked way down, okay, and then started working back up. So this is showing some strength in this big lower wick because we're working back up. So you don't necessarily have to wait for this to go back green, okay? But if this is Friday, but like let's say this is Wednesday or Tuesday, if this were to pop up and go green on the week, then you really have some strength, okay? Because once you go down, this is a 2 down. Once you go a 2 down, but then you work back up through the range of the previous bar, you have the potential to go outside, okay? You have the potential to turn into a 3, okay? Just like this candle here did on the monthly, okay? We opened here, we traded down. At one point, this was a 2 down, started to work back up, and actually turned back into a 3 and went way up and peaked and then came back down and settled. But you could have got some huge scalps trading this range, okay? And this is called a two gone 3. Really, that's not really a name for it, but it's a 2 gone 3, 2 going 3, okay? Once you start to hit the middle or so of the previous bar's range, you really have that potential for it to keep going and continuing into a 3. And when you have that, you can start to look at some of these lower time frames like the daily or the 4-hour even for those reversals, okay? At some point it's going to reverse. So that's when you can zoom into these lower time frames and look for your reversals. Okay, and this is a good example here of a reversal. This may continue and start to reverse and keep going, and this turn into a 3. Maybe not, okay? But it is reversing right now, and so you can play this inside bar breakout, okay? And your stop, everyone's got different tolerances for risk, okay? Your stop could be, at the same point you got in at, could be a break even, okay? Which is a good idea to always, once you start getting up, move your stop to break even. Okay, it could be the opening, or it could be the close of this bar right here, so 23.25, or it could be halfway in this bar, or it could even be somewhere down here in the bottom, depending on how big the inside bar is. This is a little bit big to set your stop at the bottom, but some of these smaller inside bars, you could do that. Okay, so that's one example there. So those aren't really based on scans, like I said. That's just the gainers list. Okay, so let's start looking at these time frame continuity scans, and you see here Zillow popped up again. It is on the watch list gainers, and it's also on the time frame continuity scan all the way across. So let's take a look at Zillow. Okay, and if you look at Zillow, again, it gapped up. It's green on the month, it's green on the week, it's green on the day, it's green on the hourly. So you have full time frame continuity. Okay, it's also green on the 4-hour. Okay, not surprising. you have actually green the full gamut all the way down to the 1 minute at this point in time at 1 o'clock on Friday. It was green all the way down. Okay, so this was very strong. Um, and it's also trading, if you look here, is it trading above the previous day's high? All right, so we're looking at right here, this box is green, so that means it was trading above the previous day's high. Okay, and this was obvious because it gapped up and started to run. But our current trading range, which would be this level right here, 59.37, is above the previous day's high. Okay, let's look at another example. Okay, FDX. Let's try to get one here that's not green all the way down. Okay, so FedEx was green on the month weekday just to show up on this list, green on the 60, red on the 15, but still trading above the previous day's high. Okay, so let's take a look and see what that looks like. Okay, green on the month, red on the week. Okay, green on the day, green on the hour. Currently trading right here above the previous day's high, but it's red on the week. Okay, so it did not show up it wouldn't show up on a full time frame continuity scan, but it did show up on that scan there. If you look at the this weekly bar, it's almost green. Okay, it only needs a little bit more to go green. So once this thing goes green, it's very close. You're going to have full time frame continuity. Okay. And this is an example of where the scan might have got caught in between, because it did show here green on the week to show up on this scan, but it's actually green. It's actually red on this scan. But if you look at it, it's like a matter of just a few cents here. So this probably went red in between the time that the scan updated. Okay, but it did show red on the 15-minute, which is right here. And if you look at the 15-minute, we're red on the 15-minute. Okay, so how this would come into play is at some point you're going to go green on the 15-minute, okay, and that could be your reversal, because then it could go green on the 15-minute, green on the 30-minute, green on the hour, and start a chain reaction all the way down to the weekly and go green on the weekly. Okay, and again, this is probably a case where the scanner just didn't catch up in time to show that it actually went red on the week there. Okay, but probably in the next few minutes, if we looked, it probably would have popped off this list. Okay, let's take a look at another one. Okay. Okay, ABBV, we have green on the month weekday, red on the 60, red on the 15, but trading above the previous day's high. So we have green on the month, green on the week, green on the day, also trading above the previous day's high, okay, because here's the previous day's high, and here's where we're currently trading, okay, not just wicked above it, but we're still trading above it, so that means it's a 2-up in force, okay. A 2-up in force means more than just a 2-up, okay, because if you could have a 2-up and then you start coming back down, that doesn't help you, okay, because now you're back under the previous day's range. So that's showing weakness, even though you broke above it. But trading above it is showing strength, okay. Now it looks like this popped way up and it's coming back down. So if you look here, it looks like it popped up to 119. This is the hourly, and then started working back down. So here you can get a glimpse of a reversal to the downside. And if you look here, it's showing red on the 60 and red on the 15. And so here's the 60, here's the hourly. We had a big hourly candle here. And then we had two inside candles here. Tried to work lower but couldn't. And then tried to work higher but couldn't. And then it closed down here on this hourly candle, but it's still inside here. So there's a lot of consolidation in these 2 hours, consolidating and then consolidating even more. And then we finally had a bar here where we opened up here, tried to work above, could not make it, and then it went 2 down. Currently, it's a 2 down in force. okay, and it went red on the hour, okay, and it's also red on the 15. So red on the 15 and red on the hours, why it showed up on those two boxes, but it's still green on the month, week, and day. So what does that tell us? Well, it could tell us a couple of things. Number one, we might want to watch out that we don't see a continuing trend here of down, but it also could mean that we want to look for a reversal on the 15-minute to send it back up because we have these longer time frames in our favor. Okay, we have the week, we have the month, and we have the day in our favor to go long. So what we would look for here is a break of this 15-minute. It could be either this 15-minute candle turning green, or it could be the new 15-minute candle that forms go green and start to break above these highs. And then we're going to get back into full time frame continuity. Okay, if we start breaking up on the 15, it could turn this 30-minute from red to green, and then that would start to turn the hourly candle from red to green, the 4-hour, and so on. So back into time frame continuity. So how you could use this, okay, and if you look here, we have this wasn't a 3, this wasn't an outside bar, but we have a big bar here, and now all these bars are trading inside the range of this, okay? And what this is these two inside bar candles, okay? These two inside hours is all of this trading inside this range, okay? That's how these inside bars are formed. So what we could look for is a break to the upside, okay? And if you look at this from a traditional technical analysis standpoint, it's a wedge, right? It's just like a big flag. Higher lows and lower highs, forming a wedge. So when we get a break above this, okay, or a break out of this this red bar here to a green, or then more likely the next 15-minute will go green, then we can look at going long, even though we're not red or even though we're not green necessarily on the hour or the 4-hour. Okay, because we have a little bit more confidence in that long position because we're green on the month, we're green on the week, and we're still green on the day. Okay, and then you can go even further down to the 5-minute, the 3-minute. Not typically advised to trade off the 1-minute. I do have it up here just to spot, like explosiveness, particularly in the volume, and also just to see, kind of on a micro level what it's doing. But generally, the higher the time frame you go, the more strength is going to be within that move. Okay, and the lower you go, the riskier it is going to be to get in. So you could get in on a reversal down here on the 5 or the 3, right? If, like, let's say this is an inside bar 3, let's say the next candle breaks above this range, you could take it long, but you need to have a tighter stop, okay? Because you don't have a lot of strength in a 3-minute. Yeah, as you can see, there's a lot more noise in these lower time frames, okay? And a ton of noise in the 1-minute, which is why it's typically not advised to trade on the 1-minute. But it's got to reverse somewhere, right? It's going to reverse at some point on the 1-minute to the 3-minute, 5-minute, and just gonna be like a chain reaction. It doesn't have to, okay? It could just bobble up and down and keep forming inside bars, but it can't continue to form inside bars forever, okay? A 1 is going to turn into a 2 at some point. It has to. There's no way it can stay a 1 forever. You cannot just keep going into a 1, 1, 1, 1, 1. It's not going to happen. You could go twice, like as you can see here, sometimes even 3 and sometimes even 4 inside bars in a row on a 1 hour or a 4-hour or a 30-minute, so on. But it's not going to continue to be a 1 forever. It's going to break out to one side or the other eventually. Okay, and so you can spot those reversals earlier on a 15-minute time frame, and that's why we like to use the 15-minute, because the 15-minute 4 15s is a 60. So these 4 right here, 1, 2, 3, 4, make up this bar here. Okay, a high of 118.22, high of 118 is a little bit off here. Here it is, 118.22, and a low of 117.79, 117.79. Okay, these 4 bars make up this. Okay, so that's why we look at it like that. All right, and likewise, these 4 bars make up this 4-hour bar. Okay, so that's what I mean when I say an outside bar is just multiple bars on an inside or on a smaller time frame. Okay, lower highs or higher lows. All right, let's take a look at another example. Let's see, CLF. Okay, CLF is green on the month weekday, green on the 60, red on the 15, not trading above the previous day's high. So let's take a look and see what that looks like. Okay, so we have a lot of red here. Okay, I'm not sure why that might have shown up on that chart actually. CLF. Oh, I'm sorry, this is inside day bar. It's not a time frame continuity. So this is inside day. I'm looking at the wrong scan. So this is a previous day here, inside day. Okay, red on the week, red on the month. Right now it's red on the day. Okay, and we're trading below. Look here. What was it? We're not trading above the previous day's range. Okay, green on the 60. So this looks like another case of where the scanner maybe didn't catch up because, oh no, sorry, I wasn't zoomed in. Here we go. So green on the 60, okay, but we're not trading above the previous day's high, so it wouldn't have shown up there, but it was inside day. Okay, it was inside day here. Okay, so it was on the inside previous day. So what we would look for is a break above or below. Here we broke below, but it barely, and then we started to come back up. So this wouldn't have really been a good trade. But just showing an example of what that looks like on the chart. Green on the 60, red on the 15. Okay, we have green on the 60, red on the 15. So how we would look at that could be these green bars, these green 3 15-minute green bars here in a row are probably not going to hold. Okay, if you just look at this, because we have red month, red week, red day. Okay, we do have a little bit of green here on the 4 hour and the 1 hour, just based on this movement here. But we're still trending down, overall. So if you're looking to go short on this, you could start to look at to go short when this bar started to go red. Okay, because we have 4 green bars in a row. And this right here is a 2 down, but then it worked back up, and then we went into a 2 up and another 2 up. Okay, and then another 2 up, barely. Looks like it's exactly the same, but started to work up, but couldn't make it and came back down. So we could have looked to go short right when this candle formed and didn't keep going up. Okay, red on the 15, and then in the strat, when you're looking at the strat and you're thinking about your next move, what Rob always says is, where's your next 2? Okay, where's the next 2 going to form? If you look at this 15-minute bar, is it likely that the next 2 is going to be a 2 up after working down this far and closing right here? Probably not, right? You're most likely the next 2 is going to be a 2 down. So if you're looking to go short, you could go short when this starts to come into a red candle. For a little more confirmation, you could wait until this goes to a 2 down red and have a little bit more confirmation, because eventually this is going to go red, and then it turns the hourly red, the 4 hour, and then we continue with the red on the daily, the weekly, and the monthly. Okay, so that's how we can look at that. TFC inside hour. Let's take a look at one of these. MDLZ. Okay, so what we're looking at here is green on the day, just to show up here. And then we were green on the month, red on the week, 60, 15, but trading above the previous range on the daily. So let's take a look at that. Okay, so green on the day, just to get on that chart, is right here. Okay, you can see we're green on the day. We're trading above the previous day's high, so we're green on that box. We're green on the month, okay, but we're red on the week. We're red on the 60, and we're red on the 15. Okay, so what could we look at here? Well, we were red on the week, but look, we worked way down and then came way back up. Okay, so what this tells us is it's trying to get some strength here to keep going up. And you can see that by these two previous days, we had a two down, barely, and then we had a two ups here in a row, and now we're trading above the previous day's range. Okay, so what we could look at here is a chance to go long. If you want to, you could wait until this weekly goes green for the most confirmation. But if you want to look at the daily, we had two green days in a row. So based, on the, let's say on this day, Friday, when this broke above and turned into a two up here, we could take it long. Okay. In this particular moment at 1 o'clock, we were red on the 15, but look, red trying to work back up. Okay. This is a red candle here because it's filled in. So we have a red 3, tried to work up but couldn't, work down, tried to go down farther but couldn't. So this is a good strength, like a hammer looking bar here, looking to work back up into this range. Okay, and you can see that represented here. But on the hourly, we're red. Okay, we had an inside bar breakout to the downside on the hourly, but it's looking to work back up. Okay, and if we look here at the opening range, okay, make this a little bit bigger. Oh, not that big. The opening range was set by the 15-minute bars here and here. Okay, it tried to break below, didn't really hold, came back up. Okay, and these purple lines are the previous day's highs and lows. So it's not based, the scan's not based on that. That's just my personal lines, but those are marked off the previous day's highs and lows with that. In this case, it was the high. Okay, broke above the previous day's high, came up and tried to poke above the opening range, but couldn't really hold. Okay, had a lot of inside bars here. And then we finally did have a break above when we had it. This is the 5-minute inside bar breakout, and at the same time this inside bar breakout happened, we broke above this opening range. Okay, so this is a good move right here where we broke above the opening range, we broke above this inside bar, strong move to the upside. Okay, so if you're looking at a 5-minute time frame, this is a good indicator here, and you could have played this to go long. Okay, we didn't have green on the week, but we did have green on the month, and we did have green on the day. So looking at that or breakout, you could have gone long there. Okay. Um, and we can take a look at one more example, discovery again, maybe. Okay, green on the day, green on the month, red on the week. Okay, so similar setup, but green on the 60, red on the 15, trading above the previous day's high. So trading above the previous day's high. We're green on the month, but just barely. We're red on the week, but again, we're working up. Okay, 4 hours looking good. Not including in the scans, but good to look at. Green on the hour, but red on the 15. Okay, so how do we use this? Well, this is a green bar, but it's not super strong, right? We don't have like a big bar here, but it is green. We don't have the weekly in our favor, but we do have two good days, and we do have an inside day breakout, and we do have a good strength on the 4 hour and the 1 hour. So this 15-minute candle being red isn't really too concerning at this point, okay? So what you could look at then is the new 15-minute candle going green and going back up, or this 15-minute candle going green. If this 15-minute candle turns green, then that will show some strength, right? Because that's a pretty good move up to go back green. And if you look down here at the 5-minute even, okay, we have the 5-minute is red, red, Okay, this is an inside bar technically, but it's pretty red. We have a red 2 down, but now we have another inside bar on the 5 minute. So what you could look for here is a break of this inside bar to go long before this candle turns green. Okay, and that could be the continuation to go up because we have some good strength here. Okay, this is a good example of why you want to look at multiple time frames. If you're just zoomed in on one time frame, it's hard to get the full picture. Okay, so multiple time frame analysis is going to hurt you. I mean, it's going to help you whether you're trading the strat or whatever your strategy is. Multiple time frame analysis is definitely going to help. Okay, now coming into these A plus scans, this is where we can look at some real good movers. We looked at Z already. I'm not going to bother with these volatility stuff. Let's look at Pepsi here. Pep. Okay. Again, it has to be green on the month, week, and day to show up here on this list to begin with. Okay, red on the 60, red on the 15, above, trading above the previous day's high, but not trading above the previous week's high. Okay, so let's take a look and see what that looks like. We're green on the month. We're green on the week. Okay, we're not trading above the previous week's high. This previous week had a big high wick right here, and we're not trading above it. We're currently trading right here at 163.36. So we're not trading above previous week's high. So that's why we didn't show up on that scan. We are trading above the previous day's high. Okay. So it showed up there. Green on the month, green on the week, green on the day, red on the hour, red on the 15. All right. Also red on the 30. But again, that's not in the scan. But we're red on the hour. This is a 3. So at some point it tried to work up, came back down, and now it's starting to work back up. Okay. And we're red on the 15, as you can see here, pop down, but now it's working back up. Okay, so this is another case where if we're looking to go long, and again, remember, the market was really red here, and this stock was working up. Okay, so that's showing some strength in and of itself. But now in this 15-minute, again, we have another hammer-like bar, and we're looking up to turn this 15-minute green or the next 15-minute to go green. And then we can look to go long. All right, and what did that look like on the orb scan? Okay, now this orb scan looks a lot different. Okay, this orb scan, we set the range here, the first bar of the day. Okay, as you guys I'm sure know, the first bar of the day is usually pretty volatile. Okay, we got a lot of ups and downs in the first 3 to 5, even 10 minutes. So we had a big range here. This is what set the low, and then it worked up and set the high right here. Okay, so the opening range is right here. We're already above the previous day's high. Okay, so that right there is a good sign. And we started to work back up. Couldn't really get above the opening range. Okay, but didn't really get down below the lower range. And then would have started to show up around on the scans probably around here. Okay, around 10:45 or so. It didn't hold. Okay, so still a little choppy, but what we got here was a 1. Okay, on the 5-minute, which means it opened here, it worked down, it took out this low, and then this is what I mean by when it starts working back up into the range. At this point, about halfway up, it's probably going to go to a 3. Okay, and it did. It went 3, and then from there, we're above the opening range. It broke into a big candle here, big move to a 2 up. Okay, and then started to go. Pull back a little bit, but it stayed above the previous range, stayed above the previous day's high. Overall, this is a really strong day for this stock. This is a volume profile. This is my personal chart. Again, it's not included in the scans. But overall, a very strong day for Pepsi, especially considering SPY was down 1.25%. All right. So this is what we would have looked like on the orb. And again, we're looking at red on the 60, red on the 15, and above the previous day's high. Not the week, but it's not a deal breaker, okay? Kind of how these are set up, the reason why we went to these blocks is just so you can look at, we're green all the way across, that's strong, okay? Once you start digging into, okay, we have one red bar on a 15, then you can look at, okay, let's go to the 15 minute and let's see when is this going to turn green? Because once this turns green, then you're green all the way across. And again, don't forget, we're already green on the month, week, and day to start with, just to show up on this list. Okay, so let's look at Dell. Okay, Dell is red on the 15, green on everything else pretty much. All right, and we are green, 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 red. Okay, so this is a good, when you see something like this is a pullback. So when people say like, I'm going to get in on a pullback, okay, this stock is running, okay, it broke above, it was a 3 of the previous day, it gapped up and just ran the whole day, okay. So when people say, okay, I want to get in, but I want to get in on a pullback, okay, well, what does that really mean? How do you quantify a pullback? This is how you can quantify a pullback. This is one way you can do that, okay. You can look at the 15 minute, and this was a pullback on the 15 minute. It went red, okay, and it reflects here in the 5 minute. We tried to work up, couldn't make it, started to work down. Okay, at this point, are you thinking that we're going to go red and just start drilling all the way down? Possible, of course, anything's possible. But is it probable? At this point, no, because you have the week, the month, the day, the 4 hour, the 1 hour, the 30 minute, they're all green, right? So this red candle here is the pullback. This is the pullback, okay? This is what you're looking for if you want to go long, okay? So when this, and like I said, you can go back into this 5 minute and start to look for your entries. You don't have to wait for this to go green, okay? Because at some point, we're going to go back green on the 5 minute, and it's going to turn the 15 minute green, okay? And then once the 15 minute turns back green, then you're back green all the way across. And you have the full time frame continuity, and then you have the full strength, okay, of all the time frames, okay? And again, here's the previous week range. We're trading above, currently trading above the previous week's range. So a 2 up in force on the week, a 2 up in force on the day by far. Okay, so this red candle on the 15 is not that worrisome, but you do want to look at it if you want to go long because that's a good entry point. Okay, that's a pullback. All right, so that's how we can look at this scan. Okay, and at this point, it would have shown up on the orb scan. Again, we're looking at 1 o'clock right here. It popped up. It did shoot below a little bit, but it popped right back up. So this is why it was showing up on that orb scan. And I didn't look at the rest of the day from here. It might have kept running, maybe not. I didn't look at the rest of it, but at that point in time, it would have looked good to go long. Okay, and the watch list orb, same thing, just not going to have the full time frame continuity. So if we just take a look here at, like, let's say cat. Cat is going to be green on the day. Or is it going to be green on the day here? Let's see. It's actually not green on the day. So this is a good example of, it's green here on this list, but if you look here on the daily chart, it's a red candle. So why does it look like that? Why is there a discrepancy there? So cat is trading above the previous day's close. Okay, so the previous day's close is 196.79. We're currently trading at 197.44. So we're above the previous day's close. And that's what Thinkorswim looks at when it's making these names red or green. Okay. So we have a green name, but we're actually red on the day. And we're red on the day because we opened up here and we're currently trading below the open. And so the candle is red. Okay, so this is what for the strat we would consider red on the day. but Thinkorswim considers it green on the day because we're still above the previous day's close. Okay, so that's why sometimes you'll see a discrepancy in the color of the name and the color of the candle. But what we're looking at here, let's look at let's look at it again real quick. We're looking at red on the 60, red on the 15, and trading below both those days. Okay, so we're starting from the month, we're red on the month, we're red on the week, we're red on the day, but we're working up. Okay, we're working up on the 4 hour, and you can see that reflected in these lower wicks. Okay, we're red on the 60, we're red on the 15. Okay, but it showed up because we're above the opening range. Okay, now this is another one where it popped down here. This is the last 5 minutes. It popped down, so it probably would have popped off that list here pretty soon, but it was above the opening range. The opening range was right here, popped up and tried to start working up. Eventually it couldn't, okay, and that's reflected in all these red bars here, but it popped up on that scan, the opening range breakout scan, probably just for a few minutes looking at the charts. Okay, so this is a good example of why you just don't want to trade off these charts because, or off these scans. You always want to look at the charts because you don't really know exactly what it's doing. All right. And this watch list orb scan is something that is kind of like an early indicator, so to speak, of maybe some stocks that are doing good on the day for the time being, but they might not have that strength in the time frame continuity. All right. And we just saw that with CAT. Did not have strong continuity. Okay, it was red. It's trying to work back green on the month, but it's not quite there yet. But really, this is a case where, if anything, we'd be looking to go short on this stock. And based on this 4 hour here, if this 4 hour were to go red, we're going to be back red across the board. Okay, and you can see that reflected here. We have some reversals here. We tried to go 2 up, couldn't make it, and now it's reversing back down. Tried to go up here. This is that 2 up on the hourly, and just couldn't do it. So now it's coming back down. So if anything, this would be a stock that would be looking to go short, but it did at some point break above the opening range high, so that's why we showed up on this scan. All right, let's take another look. Walmart. So Walmart was very strong at this point. Okay, but Walmart's not on this scan. Okay, so why is that? Let's look. Okay, because of all this red, look at it. Red on the month, red on the week. It's green on the day. Okay, and if we look at the orb, it's well above the orb. Okay, opening range is here. It broke out. It never even tested the midline. It broke out and just kept going. Okay, pulled back, but at this point, it's still over the opening range. So it's strong from an opening range standpoint. Okay, and that's reflected in the daily candle where we opened here and we're trading well above where we opened. But we're red on the month, red on the week. There's a lot of red here on the longer time frames. So even though we had a nice opening range breakout, this isn't something that we look at to go long for like a swing trade, right? We wouldn't look to like buy and hold this stock or this option at this point in time. And a good indicator of that is we're inside on the day. Okay, so trading inside bars can be dangerous because they're choppy inherently. Just by nature, it's choppy because it's a consolidation range. So you have buyers and sellers trying to battle it out within this range. It's not broken above the previous day's high or below the previous day's low. So trading a one, Rob always says, don't trade a one. And this is why, because you could get fooled. Okay, you could get fooled into going long because of maybe this 4 hour, or you look at these 1 hours. These look good at some point, right? It looked good here on the 15-minute for a little while, looked real good, but now you are coming back down. And so you're still consolidating for the day. So you're going to have more strength if you're breaking above, or more weakness if you're breaking below the previous day's high or low. Okay. Now, can you still trade this? Sure. You can absolutely still trade this, but you want to be in and out. Okay. You want to scalp it. So if you're doing options, you want to be in and out. If you're doing shares, same thing. Above this opening range is a good buy. Okay. But as soon as you start seeing some weakness here, you probably want to bounce. Okay, you probably want to get out, even though it did start to work back up. It eventually couldn't hold. Okay, and you don't really want to be holding something long if you're this red on the week and you're this red on the month. And for the previous 2 months, really. Okay, this would be a good example of here of going short on this previous week's breakout to the downside. All right, we had an inside week here. It's a big range, but it was inside. And now we have a continuation. So if you look at the big picture here, we have, this is the weekly chart. We started to work up, had a few good weeks in a row, came back down into like a doji type candle here. And then we just had a 2 down and boom. Okay, so when you're looking at this from this standpoint, like let's say if you were here, this looks great. Okay, let's go long. Well, what happens next? Boom, you have a 2 down. Well, when you're right here, where are you more likely to be a 2? Where's your next 2 going to be? Is it going to be a 2 up or a 2 down? If you close right here, a little bit below the midpoint, it's probably not likely to go back up. Okay, and especially at this point, you would have still been in a red month. So is it more likely to be a 2 up or more likely to be a 2 down? At this point, it's more likely to be a 2 down. If it closed up here, right, around 151 and change, it probably would have more likely to have been a 2 up. Okay, so if you look at these previous bars, where is this candle more likely to be a 2 up? It closed right here. Is it more likely to be a 2 down? Well, not at this point. And that played out. It was a 2 up. Okay, where's it more likely to be a 2 up here? Probably up. At this point, well, now it looks like more likely to be a 2 down. It's not saying it's not going to be a 2 down. Definitely, it might still have been a 2 up, but it's more likely to be a 2 down. So now this could have been a good chance to take it short. Okay, but what we have here is 2 big weeks down and then an inside week. Okay, where it tried to work back up, but it eventually couldn't and ended up closing here. Well, now where is it more likely to be a 2 up or down? It's kind of in the middle, so you're not really sure. But what you do know is that it did try to work up and got pushed back down. You can tell by this big wick. So just looking at the wick, it's probably more likely to be a 2 down. So we would have looked to go short at the break of this 142 to the downside, and boom, we got that. Okay, it opened right where it closed, pretty close, and then just started to work down. And at this point here, 142, we could have gone short. Okay, time frame analysis and the strat you can apply to any time frame. So you can play the inside week bar breakouts, inside days, inside 4 hour, 1 hour, all the way down. And like you saw before, we looked at some inside bar 5 minute breakouts. Okay, like right here, if you were playing the 5 minute chart, you have a lot of good strength here. You get a big inside, you get a small inside bar based off of this big 2 up. Okay, this was a big move here. Inside bar. Where is this more likely to be a 2 up? If you're just looking at it, it's more like, where is this more likely to be a 2? If you're just looking at it, it's more likely to be a 2 up at this point because you see a big lower wick. It tried to work down but couldn't, and it closed up above. It closed up close to the high. Okay, so it's more likely to be a 2 up. So we would look for this break of this high, and boom, we got it. So this will be a good range here to take a trade at this break here. Now, the shorter the time frame, the more tight you need to be with your stops, or you need to be in and out faster because you have more noise, you have more opportunities for reversal, and that's what we got here. Okay, so you can still play inside bar breakouts on lower time frames, but you don't want to set it and then walk away from it. Okay, whereas if you're playing the long game and you're going short on an inside week breakout, you can play swing trades a little bit safer on the longer time frames, the weekly or the monthly. Okay, it all depends on your trading style, and it all depends on your risk tolerance, and it all depends on what you're looking to do. So it's not a one size fit all setup, and the strat will customize itself to your own trading style. Okay, you can use it if you like to scalp on the 1 minute. You can use it if you like to go swing trades on the monthly. It's the same principles. There's only going to be a 1, a 2, or a 3. The inside bars, the outside bars, the 2 up and 2 down, it's all the same concept. You just apply it to different time frames based on what you're looking to do individually. Okay. And I think that pretty much wraps it up. We went through every scan. We went through every chart. Not every chart, but we showed examples off of every scan based on the charts. Um, I'm not sure I've got much more than that. Again, check out our Discord. I'll leave a link in the description. You can always message me if you have any questions about any of this, and hope to see you at some point in the Discord. Thanks for tuning in.